Ladies and gentlemen, good day and welcome to Privi Speciality Chemicals Limited Q4FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the companies as on the date of this call. These statements are not the guarantee of future performance and involve risk and uncertainties that are difficult to predict. I now hand the conference over to Mr. Shrikant Sangani. Thank you and over to you, sir.
Thank you. This is Shrikant Sangani from SGA. Thank you everyone for joining us today to discuss Privi Speciality Chemicals Q4 and FY25 business and financial performance. The financial results and investor presentation are available on the company's website. The recording of today's earnings call and transcript will be uploaded on the company's website under IR section. For today's call, from the Privi team, Privi team is represented by Mr. Mahesh Babani, Chairman and Managing Director, Mr. R.S. Rajan, President, Mr. Narayan S. Iyer, Chief Financial Officer, Mr. Sanjeev Patil, Senior Vice President Strategy, and my fellow colleagues from SGA team. Please note there may be forward-looking statement during the course of the call and must be viewed in an aggregate with the risk that company faces. With this brief introduction, I now invite Mr. Babani for his opening remarks. Over to you, sir.
Thank you, Shrikant. Good evening to all of you. And we are pleased to report the best ever quarterly and annual financial performance, marking a significant milestone in our journey. The year 24-25 has been good for the company with all-round improvement in all areas of the company. The performance has been achieved through process intensification leading to yield improvements, new specialty products being launched during the year. As these factors will continue in the future, we are confident of sustaining this growth with margins. Key highlights of the year gone by are that the demand for our core products are healthy and our plants are operating at an optimum level. Of course, we are debottlenecking capacity further because of the demand. We have also developed 2 new premium products to be launched in this current financial year, where during mid-year it will be operational. A previous update is that the plant has been successfully commissioned. It would take 1 year more to break even. As we know, chemical plants, it's not so easy to get the practice in place, so that because these are very high value specialties. However, the future is very bright and certain since these are going to be sold back with a buyback arrangement to the subsidiary company. So therefore, we are very confident that the future is very, very bright for this particular vertical in coming years. As we are dealing with the market leader of entire world. Over the decades, your company has emerged as a trusted partner to almost now all companies in our field. The compliance of our company is of a high standard and we endeavor to be best in class. Our capabilities have grown significantly both in scale and complexity, driven by deep client engagement and a relentlessly focus on innovation. We are transitioning from being a leading supplier to a collaborative partner, strengthening relationships and creating long-term and sustainable value for our customers. Our core strength lies in our robust backward integration, particularly through CST and GTO strategy. The integration ensures consistent quality, cost efficiency, and of course long-term supply of security of critical raw materials, giving Privi a distinct competitive advantage. It also enables great control over the value chain, as these are raw materials which are always in short supply, driving innovation and reliability in delivering high performance of aroma chemicals to global customers. While driving growth, we remain deeply committed to sustainability. Our current gold rating from EcoVadis further validates our proactive approach in aligning the global best practices, reducing carbon footprint, and also strengthening ESG disclosure. We are now striving for a platinum rating, and we are not far from it. Additionally, by increasing our share of green power, we have also reduced energy costs, also reinforced our dedication to sustainable energy solutions. This is only the beginning of our growth story, my friends. It is also our endeavor to be number one aroma global chemical company. Friends, we are not far from it. I now hand over to our CFO, Narayan Iyer, for detailing on the financials. Narayan, please.
Thank you, sir, and thank you very much. Good evening to all my dear investors, stakeholders, and all those who believe in Privi and who are there on the call. The year that has gone by has reaffirmed our belief in Privi's growth trajectory. With strong operational execution and a favorable product mix, we are confident that Privi is well positioned to sustain healthy growth and deliver robust profit margins going forward. Let me share some of our recent developments. All our key products are currently operating at optimal capacity, as demand for all key products are very healthy. Our units have all been operating at close to 85 to 90% of our capacities. As has been informed, we are actively working to expand our production capacities for our key products and take it up from 48,000 metric tons to 54,000 metric tons. We expect this expansion to complete by March 2026. During the year, the company had launched various products like Indomaran, Fluorovan, and Amber Udi Extreme. These products are used in day-to-day applications like air care, personal care, and laundry care, and they have been very well received in the market. I would also like to highlight on the US tariff that's been going around. We really do not anticipate any significant impact from the ongoing US tariffs, as our presence in the US market is limited to around 10%. At the moment, almost all countries supplying to US have to bear higher tariffs than India. Moreover, our business is widely spread across domestic market, the European markets, the Asian and the Latin American and Middle East markets. So these were the key developments that I had to talk about. Now coming to the major financial highlights, starting with Q4 for financial year 24-25 Q4. The total income for this particular quarter was a record 628 crores, which is a growth of 28% on a year-to-year basis. The EBITDA came in at rupees 147 crores, which is a growth of 50% on a year-on-year basis. EBITDA margins once again is at a record high of 23.5% for the quarter, and we expect to maintain similar EBITDA margins in the near future. Profit after tax for the quarter was a healthy 64 crores as against 32 crores, which indicates a 100% growth over the previous year. And lastly, the exports contributed to about 72.5% for this particular quarter. Giving highlights for the entire year, for the year 24-25 in comparison to the earlier year. During the year, the overall income or the overall revenue stood at rupees 2,122 crores, which is a growth of 19% on a year-on-year basis. Overall EBITDA margins for the year was a very healthy 474 crores, which is almost a growth of about 37% on a year-on-year basis. EBITDA margins was at 22.3% as against 19.7% for financial year 23-24. Profit after tax for the overall year was at 185 crores as against 95 crores achieved in financial year 23-24. And exports on an overall basis was at 70% for financial year 24-25. My dear friends, in the overall interest of all stakeholders and investors of the company, we have restrained from publishing certain sensitive information like quantitative and segment-wise sales. I hope you all will understand this. With this as a background and on a very strong footing, I would like to conclude my address on the numbers and open the floor for question and answers. Thank you, and over to you, Srikanth.
Thank you, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sudhir Beda from Beda Family Office. Please go ahead.
Yeah, good afternoon, sir, and hearty congratulations to entire TV team for outstanding results, sir.
Thank you.
Thank you.
Thank you.
Thank you.
Sir, my first question is, you did 23.46% EBITDA margin, including other income, in the last quarter. So this kind of margin, 23.5, is sustainable over a period of time, over this current financial year?
So, Mr. Beda, I would think that north of 20 will always be our target. We'll always try to be above 20 for sure. As we grow, we may have to compromise to a certain extent by 1 or 2%, but we'll try to maintain north of 21 for sure. But this has been our endeavor to be in the specialty chemical business, and we expect that these margins are good enough to sustain.
So this is margin 23.5 for what we delivered in Q4 is to do with any other income that our other income is quite high in this quarter. So can you throw light on it?
Mr. Sudhir Beda, good evening, Narayan here. It's not just the other income, it is more with regard to, as Mahesh Bhai addressed, with the process innovations and yield improvement that we were able to get these margins in this quarter, in fact, So, yes, there is a little bit of other income in this quarter which has added to it, but overall the margins will be sustained because of our process innovations and the bottleneckings that we are going ahead with.
In fact, Mr. Beda, this is Sanjeev here. In fact, if you look at the last 8 quarters, we have been consistently earning about 20% EBITDA margin, and this has been result of substantially improved processes, better yields, and also superior product mix. So this is what has resulted into this higher margins, and quarter 4 is slightly higher, as Mahesh Bhai said. So that's about it.
Yeah, got it. And sir, any guidance you would like to give for current FY26? Sales growth and margin?
We don't want to give a very forward-looking statement, but we will minimum try to maintain our average growth rate of 20 to 25%.
Great. And sir, last question. In the standalone and in the Concall, there is a difference of 33 crore of revenue. I am talking about the revenue. So in this 33 crore, what is the contribution from Privi? And when it will break even or will start contributing to bottom line, this JV?
Yeah. Privi has just about started its operation somewhere in February 25. So there's hardly any contribution coming onto the revenue front, about 4 crores or so. And as Mr. Mahesh Bhai indicated in his initial opening remarks, Privi will start possibly a break even from somewhere around a year from now, maybe 26, 27. And then it will start contributing both in revenue and the margins, in fact. Margins, as indicated in the past, should be around the 20% plus range only, in fact.
It's an assured business, and it will keep on growing. It won't have a growth of 25%, but 10-15% in Privi will always keep on growing because, the average growth rate, whatever the normal in the market is, GDP growth, 7-8% will always 10% for Privi. It won't grow externally, but it has a potential to reach about 350 crores of top line in the next 3-4 years.
And as we said earlier, this is a very strategic fit, so it has to be seen in that entirety.
It's like a customer service to the great market leader.
Yes. Thanks for the opportunity and all the best.
Yeah, thank you.
Thank you.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers Limited. Please go ahead.
Hi. Good to see heartening results. But a little bit of a note of doubt from my end. This is not as much as to what has been done, but because of lack of adequate understanding at my end. You earlier mentioned that sustainable growth over 20% and margins in excess of 20%. But 2 points come to my mind. One, when I look at the nature of your clients, the consumer firms, the fragrance firms, the other household article producing firms, given the nature of your clients, it's a bit surprising that how do we expect to grow at a sustained rate of 20%. Secondly, when I look at our own history, while top line has grown over a period of time, but the same thing can't be said about the profits. Profits have been uneven, and actually the profits have exceeded that of 2021 for the first time in the current year. Even the top line growth over 5 years has been about 12-13%. So I'm curious to understand what makes you confident of that high 20% growth rate, and also considering a little checkered past, why that confidence on the growth rate as well as on the profitability?
So, I appreciate your, introspection on the balance sheet. So the growth actually comes from, we are at the lowest end of the prices over the last 5 years. If you see, our prices of our main products was always in the region of $6-7, which was it came down from $10 to $6 in the last 6 years. So only if it bounces back to even 8.5, so the growth comes from also there, and also the volume is increasing of these important products. You see, the growth is coming from countries in Asia, India, Africa, where the usage of aroma chemicals has been very insignificant in the last 10 years. And now these people have started using, like India, it never had a, awareness of a perfume soap. It used to have only Lifebuoy soap. Now you see the variety of soaps that are there. All are perfume. You see the variety of deodorants that are there. There was no concept of deodorant 10 years ago in India. So these new markets, the new air freshener, the hygiene conditions have improved. So the floor wash, everything is increasing in India itself. Forget also the export markets or the African markets and the Asian markets, and also the Dubai and the other areas. The markets are improving significantly. So the awareness of cleanliness is coming, awareness of hygiene is coming all over the world. So this has been, actually after COVID, this has taken a fast track to increase our shares. And the demand is much higher. So today the prices have also come up to, we are at now $7.5. Going forward, I think it could be even 5-10% higher. Average price.
And the other thing is that Privi's comfort with all the top customers is that we are very sustainable, and therefore as you see, we have invested in the last 5 years into camphor, then into Garasmus as well as Panadil, and these products are leading to a significant growth, and that is what is resulting into this 20% growth. So all along we have been growing by introducing newer products, and we have been able to get the market share from our customers, and they're the same customers to whom we keep on selling the same products, because the market end customers are only so many. So therefore we are able to grow at that level. That's how we are able to beat the market consistently. Last 5 years have been sick, but that we'll explain in longer detail to you in one-to-one meeting perhaps. But we grow by introducing newer products.
No, thank you for both of those. But if you look at almost 2/3 of our business is coming from international markets, be it in Europe or Latin America or Asia and the other markets. Now, Europe is hardly growing big. Most of the Europe seems to be frozen in time.
Sorry to interrupt, Mr. Bharat. Could you move a bit closer to your phone?
Are you able to hear me clearly?
No, I would ask you to move a bit closer to your phone. We cannot hear you well.
I'm inside my phone. I can't get more closer to my phone than this.
Yeah, it's audible, sir. Please.
Okay. So my question was that more than 2/3 of our business is coming from international markets. When we look at the composition of markets like Europe, where there is hardly any economic growth, some of the other markets are in a better shape, but not at the level of 20% kind of potential. So given all of that, what makes you confident? I'm not really, as I mentioned, this is more to educate myself, so please pardon my ignorance, but I'm not able to grasp, given the more checkered history over the last 5-6 years, and given the fact of the client base, the geographies, as well as the nature of the client industry, consumer, fragrance, these are mature industries. So while hygiene has improved after COVID, but in the 3 years after the COVID, we have degrown in our profits, while fragrance content would have improved in soaps and shampoos and all of that, but it's not exactly a novelty, and therefore it still beats me as to why would you believe that high 20% kind of growth will prevail going forward.
Well, we are confident of our growth as we see our order book position, and we also are working closely with clients. We have much more clients right now, customers who are given commitments. Earlier we had only 3 key customers, now we have 6 key customers. Probably all the top 10 companies are our customers. And also, let me tell you that hardly 7% of our market share is in the US. And these products are not being produced in the U.S. So that won't make any significant difference. And the growth of our products also comes from new asks from Africa. There are several companies in Africa who want these products made in India or made in Dubai. So our growth in this area is also increasing, and we have at least 5 new customers who are good size to support this. So we are confident with our order book position, we will be able to maintain our share of our business, our 20, 25%, 30% growth.
Bharatbhai, it is an honor that, person of your stature is, asking us these questions, and we would definitely like to, talk to you offline also.
Sure. No, appreciate. One last thing, while return on capital employed and return on equity have improved in the current year, and of course, earlier our profit suffered, so I understand capital efficiency would have declined in that 3-year period. But when do you think, given the fact that our markets are more international, therefore working capital structurally, I suppose, would remain high. And I don't know what kind of fixed asset turns optimally can be expected. But given the nature of high working average fixed asset turns, when do you think we can see more healthy, say 23-24% kind of return on capital employed? At what stage do you think it is possible, if at all it is likely to be the case?
Bharatbhai, good evening. As far as the fixed asset turnover that you talked about, it should be in the range of around 1.4, and we are moving towards going to 1.6, 1.7 as in the coming few years. Working capital cycle, definitely we have been striving hard, and we have been successful enough in bringing it down. And you would have seen that over the last 2 years, our working capital overall cycle has come down, and we still expect there is scope and room for improvement. At least by another 15-20 odd days, we can bring down the overall working capital cycle to it. Yeah, Bharatbhai?
Yeah. Sorry, I'm listening. Would you continue, or you're...
I thought that someone was interrupting me. So we expect the working capital cycle to improve, and that's how will help and enable our ROE, ROCE to further grow about. And the levels that you have spoken is our also aspiration, and we feel that we are striving towards it, and we should be able to reach there shortly in the coming few years, in fact.
Okay. Thank you.
I also want to tell you, today the market scenario, way specialty chemicals are stand out. Sustainability is a key word, and supplier in coming times, I can tell you, will be more important for a customer than his customer. Today, suppliers will be more important than his customers. That's what I see times coming. I'm sorry, but this is my honest observation.
No, thank you for that. If you allow me one last thing, if the asset turn is say 1.4, maybe it will improve to 1.5, 1.6, but let us say it is 1.4. Therefore, 100 rupee of assets will produce a turnover of 140. Given the kind of working capital, on that 140 rupees, we will need to invest about 35-40 rupees minimum, if not more, in working capital. That means 150 rupee of total capital will generate a turnover of about 140. Therefore, 1:1. If we take our EBIT margin if I say EBITDA margin at about 23-24%, EBIT margin would be about 17-18%. Therefore, capital efficiency at best can be around 17-18%, unless margins improve materially from here or fixed asset turns improve significantly from here, or working capital can come down dramatically. None of these in the foreseeable future can change dramatically is my impression. Therefore, I'm not clear why 23-24% of return on capital employed, how and when it can be achieved.
But specifically to answer, as I said, we are in the process of deploying and adding some capacities. These capacities are more with regard to debottlenecking and augmentation. So the capex required for such expansion is not on the same lines as we had to do when we initially set up our existing plant. So that's how I also happen to tell you that from 1.4, 1.5 currently, it is going to move towards the 1.7, 1.8, and in some products it may even, be closer to the 2. So we definitely are going to improve upon our asset turnover. Second, I also happen to mention that we are in the process of further reduction or further improvement of our working capital days. So that will also add. So your equation about being 1:1 may not be so true. And last but not the least, the entire world is looking at India, because they all would love to see someone other than China really taking the battle ahead. I do believe, and the foresightedness that Privi has a great chance to achieve those numbers what you happen to mention.
Thank you so much. All the very best, and I will look forward to detailed personal interaction to understand better. But thank you very much for all the elaborate discussion and details.
Thank you, sir.
Thank you.
Thank you. The next question is from the line of Rohit Nagraj from B&K Securities. Please go ahead.
Thanks for the opportunity and congrats on a very good set of numbers. So first question is in terms of the growth for FY26. Given that all our capacities are operating at optimal level, how do we foresee volume growth coming in for FY26? Given that the debottlenecking exercise will only be completed by the end of March 26 and it will be applicable, the new capacities will be applicable for FY27. So just your view on this. Thank you.
Rohit, good evening and thank you for appreciating our performance. We are having some certain capacities yet to achieve to our optimal capacities that we have, and we hope to grow the balance 15% that we have. And meanwhile, we are also debottlenecking some of our major products, and that's how the growth will come for the year 25-26. But we are very, very optimistic of the 20% plus growth in this year, in fact.
Sure. And the second question, in terms of growth that we are seeing from the volume side, new product side, just slight understanding, as Bharat was also asking, is that globally, are there other players who are not expanding capacity and because of which we have a better chance to play into it? Or is it that generally the growth itself is higher for these products and that's why we are seeing even after some competitors are putting up the capacity, we still have a chance based on our interactions with our customers? Thank you.
Yeah. So the answer to this question is, yes, others can also expand, but the speed at which Privi, puts up capacity is something very, very important. And also the fact that when we put up the capacity, the kind of plants and kind of assets that we build in terms of sustainability, in terms of zero liquid discharge, that is what gives edge to Privi as compared to many others in the play. And overall dependability that Privi has developed over the last 2 decades, wherein, and you can see that in the 3 products that we have introduced, we are fully sold and expanding further already. So that is the level of comfort that most of our customers have. And the new products that we bring in are always bought in close connect with our customers, so that we are aware of what are the products on which our customers are demanding new products, and that's how we get more wallet share of this. I mean, we get more share of the wallet from the same customers. And also, it is not only China plus one, but also Europe plus one, US plus one as a strategy. Because, whatever is happening on the tariff side and all that, but most companies, leading companies are looking at buy versus make decisions, most multinationals. So therefore, since we are competitive and we have reached a particular threshold level of growth, therefore we are able to attract and convert many of the existing products. For a customer, if you are making it himself, then he is deciding to outsource that from us, because we are able to provide it competitively. And also the China plus one factor, which all of us know very well, which is also helping us.
Sure. Just one last small suggestion. I know from comparative purposes, we don't want to give split up of volumes. If you can share just the overall aggregate volumes on a quarterly basis, it will be helpful just to understand in terms of the growth path on volume terms, where are we currently. That's it from my side. Thanks a lot and all the best.
Thank you. We'll do that.
Thank you. Then, ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Abhishek Ranawade from Oaklane and Capital. Please go ahead.
Hello.
Yes.
First of all, congratulations, sir, for such a solid result.
Thank you.
Yeah. So my question was, could you please share your revenue by product category along with the corresponding margin for each category? And is there any shift happening from towards value added since last year?
So giving information between the category of products and their margin is really sensitive, and we would not like to put that up in a public domain. So please respect that, and this is in the best interest of all the stakeholders, including all the shareholders and others. So therefore, we will rather refrain from giving that information. In terms of changes in product mix, there is no drastic change. What you have to understand is there is a steady change, and that is an evolving process. So existing products also are doing well, and the new products also are doing well. So overall, it has been a good time, and it will continue to be a good time to come in.
Okay. So can you tell me, for the current existing products? Hello.
Mm-hmm.
For the existing product category, so the EBITDA margin expansion. So is there any contribution due to the shift is happening or?
Yeah. So if you see the presentation that we have put up, earlier, in terms of products that we, value-added products that we make, those are contributing the better, and that is what is adding to the value. Okay. And we also now have products which are in that whole product basket range. We have products which are expensive, over $100 products, which is adding value to, even if the quantity is small, the value as well as the contribution is significant.
So in coming years, can we expect that this shift will be faster, or is there any trend going on?
Yes, that's what we are working on.
Certainly.
Yes, we are working on that.
And sir, so as you said that input cost for you this whole year was lower. So what was the reason behind it?
No, that is input cost, as in you have to see it in terms of improved yields, you know. It is not that the cost of raw material has substantially gone down. It is because, you know, it is improved yields which is resulting into lower material cost.
Okay.
It is a function of improved yields as well as the value-added products that we talked about. So we are able to manufacture products from our side streams, and in fact that has been the, you know, journey of Privi for the last about 7 years, wherein from many side streams we have developed products which add significant value. So instead of, you know, disposing the side streams as a normal chemical or a solvent or a fuel, we are able to add value, and that is what has, you know, led to significant improvement in the margins, and that's how the costs have come down.
Okay. Okay, sir. Thank you.
Thank you. The next question is from the line of Manish Otswal from Nirmal Bang Securities Private Limited. Please go ahead.
Yes, sir. Thank you for the opportunity. I have a question on the full year performance. So we have shown 19% growth in our revenue. So my question is, sir, given our key markets, so it is a function of we added a lot of customers in last 1 year, or because market growth rate is much lower than this growth rate. So what is the function, whether we added more products last 1 year, which are helping us to deliver 19% growth? We added customers, we added geography. So can you explain the 19% growth, and what is the volume growth in our business in F25?
So, as we have stated, you know, I would once again like to repeat that we are getting more share of the wallet of the customer. So it's the same customer. Let us say I have introduced Musk range of products. Now it's the same customers to whom I'll go to sell, and because of our reputation, we are able to get you know, better share of their wallet, as well as we have also got some new customers and new geographies also. So it's a combination of all the factors which is resulting into higher growth rate, and it will continue to grow.
Okay. And second, I want to understand this expansion in the gross margin on the full year. So can you explain the factors which contributed to this expansion in the gross margin for the year?
So as I already explained, you know, it is the products that product, you know, mix that we have now have, which includes products which are high value products costing over, selling over $100 per kilogram, as well as the products that we make from the side streams. You know, so from the side streams, we make products which give higher contribution, and that's how our overall gross margin improves. Am I able to answer your question?
I mean, is there any supply cut in our chemicals in our product segment where the prices shoot up because of that?
No.
No. Okay. Thank you, sir.
Thank you. The next question is from the line of Sajal Kapoor from Anti-Fragile Thinking. Please go ahead.
Yeah, hi. Thank you for taking my question. Given that Privi is transitioning from supplier to partner in terms of core development, this will probably require fresh investment in, you know, things like enhancing the capabilities in terms of hardware, lab equipment, software, as well as scientists. So what kind of investments do you anticipate in the current fiscal? And if you can give us, you know, a sense on the medium-term outlook. Thank you.
So we are confident that we will be able to keep our growth rate at about 25-30% for sure, and we will come back to. We are planning and working out the growth potential for several products which are in demand from our customers. We are working out the project cost. There will be a capex plan in coming year where we are confident that we will be able to multiply and keep a continued growth for the company.
No, I completely know that.
Strategy.
Sure. China plus one, I'm completely also optimistic that, given you have been a leading industry player over several decades, from your vantage point, you see better than any one of us. But I mean, given the fact that we all know that future is unpredictable, I mean, no one knows. So no one saw this U.S. trade, U.S.-China and, trade tariff coming at this kind of intensity, right? So future again is unpredictable. My question is more broad in the sense that given Privi was always a catalog or a product company and we were not offering our capabilities or scientific capabilities as a service until we struck this JV with Jivida. Now, given the success of this JV, which is a more of a service, manufacturing, development and manufacturing services, clearly I think Privi sees this as an additional growth revenue stream, but that will also bring its own set of, challenges and investment. So my question was more broader in that context.
So you hit the nail on the head, as I say, but previous capability in terms of R&D, we already have 90 scientists, who have, and most of these guys have been with us for a very long time, including the team leaders. So they understand the nuances of aroma chemical industry very well, and aroma chemistry also very well. From pioneering chemistry to, musk chemistry, what have you. So all of that they understand very well. So, and in terms of laboratory equipment, in terms of capabilities at the lab, instrumentation and all of that, we are, state of the art. We have all of that with us. It's only that we are now offering the services more aggressively, and we see huge amount of potential in this thing, And many of these investments have been done in the past. That's how our ratios have been slightly worse. But all that is now paying off in terms of our sustainability, in terms of our lab standards, in terms of the people that we employed. So all of that is now paying off.
No, absolutely. And I think Mr. Bhavani in his opening remark spoke about yield improvement. And again, these yield improvements, they are not lucky breaks. I mean, these things happen after a very long period of, what's called the learning curve or the experience curve, where, scientists try multiple iterations over a very long period of time before you get a breakthrough like a yield improvement, right? On a sustainable basis. Yeah, absolutely. My second question is, so that was just a broad comment. I completely agree with your views there. My second question is, history tells us that for every 27-28% growth in per capita GDP, the demand for aroma and niche chemicals doubles. So 30% give or take GDP per capita growth. So it's a very non-linear growth curve. If you see a small change, which is just 25% give or take, happening on the per capita consumption, is doubling the market for niche aroma, specialty, fragrance, chemicals. Is that where you are? So is this the reason why you are optimistic in terms of sustaining a growth momentum? I mean, whether it comes out to be 15% or 25%, that's anybody's guess.
Yeah, that is also one of the key reasons you have very rightly pointed out in terms of trends that every penny increase in GDP leads to multiple effect on the aroma chemical consumption, and as the living standards are improving, which Mr. Bhavani referred to, that those demands also are increasing. So we are therefore feeling, and also always remember our increasing share of wallet of the customers, because when we introduce a new product, it is done with huge amount of history. As much as you said that the yield improvement is not a luck by chance, but similarly, when we introduce products, they are also based on a lot of homework that we do, and therefore we feel very, very sanguine that we will be able to get this kind of growth, including the reasons that you have pointed out. Yes.
Absolutely. Thank you so much for answering all my questions, and wish you guys all the very best. Thank you.
Thank you.
Thank you. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Manan Madlani from Kamayakya Wealth Management. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity and congratulations on a good set of numbers. So my first question is regarding the CapEx. You mentioned in the PPT is for FY26, the number is 250 to 300 crores. So is it entirely for debottlenecking or any other plans with this?
Yes, it is basically for debottlenecking, for expanding on our major product sector.
So to follow up on the same, so after spending 250-300 crores, we'll get 6,000 metric tons additional capacity, right?
That's correct.
So if I do the number, our revenue from what we are getting currently, it will be somewhere in the range of 300 crores only, like from this capacity. So why the asset turn is such low on the debottlenecking?
No, see, I'm not going to talk exact numbers, but our asset turnover will definitely improve with this debottlenecking also happening, because your numbers are much lower than what we are projecting.
Okay. And sir, on the gross margin side, so last quarter our gross margins were highest ever, if I recollect it correctly, 51.5. And even last year, that is Q3 FY24, it was highest. So in Q3, is there any seasonality effect or was that just a one-off? That's my first question.
It could have been affected because of certain product mix, especially there could have been a little bit higher movement on the specialty, high-ended specialty. But I would like to, reply to all my investors that you need to look Privi on an annual basis rather than more of a quarter-to-quarter thing. Because in one quarter you may have 0.5% plus or minus. That's not really, to be how what we need to be looked at. As a few of you all yourselves indicated that whatever Privi is achieving is on account of a long-term strategy where it takes years and years of chemistry and improvements to showcase and get the results. So my sincere and simple, honest request to all of you to look at on a yearly basis rather than just compare 1% going up from one quarter to the other.
Yeah. So that was my question actually. So on a yearly basis, if I look at our 3 years number, it's been continuously growing. Now, should we expect for FY26 the gross margin should be at least 45% plus?
We indicated in our opening address, both by Mahesh Bhai and myself, you can expect margins to be at these levels going forward.
Okay, fair enough. And our utilization currently is 90%.
Mr. Manan,
right?
Mr. Manan, may we request that you return to the
Yes,
question
sure.
queue for follow-up questions, as there are several participants waiting for their turn. The next question is from the line of Nikhil Porwal from Perpetual Capital. Please go ahead.
Yeah, hi. Thank you so much for the opportunity and congrats to the team on a strong performance. Continuing on one of the previous participants' question. So, see, broadly, if you all are running at 85-90% utilization now, and the capacity addition is around 12.5% over the existing capacity, and this goes live in FY27, and if you plan to deliver more than 20% growth consistently, so can we expect, is it broadly basis improved pricing of existing products along with higher share from high value, low volume, high margin products?
So it is combination of these two, but there is one more factor that I would like to emphasize is that our flagship products, we have been making these products for a long time, almost 20 years. We are number one globally. So there, by hindsight of this 15-20 years of learning curve, we have been able to debottleneck those capacities and increase capacities there significantly with minimal capex. So that is also going to play a role going forward in terms of achieving the growth. So That's a very crucial thing we have. For example, if you are doing something as a batch process, we are converting that into a continuous process, or a process was done which could give you, let's say, 10 tons per day, or you debottleneck some of the auxiliary equipment and you get a higher 15-20% capacity. So this is what is happening because of all the years of experience of running these plants and a strong technical services team that we have. That is also leading to this growth, apart from new products as well as slightly improved prices.
Right. So, sir, ideally on higher volumes and higher share of these products that can expand margins, we are still guiding for margins to stay around current level or maybe even contract by 100 basis points. Is that being conservative, or how do we look at that?
So didn't somebody just a few minutes back mention that we live in a world which is VUCA world, an uncertain world? Therefore, we are, in terms of committing to you, we are being slightly conservative. But obviously, internally, we are working at the numbers that you will also love to hear in times to come.
Right. Sorry, one last question from me is, so this quarter there was other income was slightly higher than general. Is it related to stops from the government that you all have just released? There was a press release about last few weeks ago.
No, Nikhil. The other income has nothing to do with the state incentives, which will come going forward, in fact.
Okay, so is this sustainable or is this one time in nature?
Other income.
Other income is sustainable. We will keep getting in fact.
Okay. Thank you so much.
Thank you. The next question is from the line of Jainam Ghelani from Swan Investments. Please go ahead.
Hi, sir. Congratulations for a great quarter and a full year. So, basically our gross debt stands around 1,100 crores and we have multiple capexes coming over the years, which we might be able to meet through cash flows. But so then what is our plans? Like what could be the peak debt levels and what is our plan for debt reduction from current levels?
Thanks, Jainam. Of the said 1,100 odd crores, there is a capex, there is a loan of about 232 crores lying in one of my JV subsidiary. So as such, overall, the standalone basis, our debt has come down. And to answer you specifically what the debt levels will be, at peak level requirement, our overall debt will not be exceeding a debt EBITDA of 3. Currently, it is at 2 odd on debt to EBITDA, in fact.
Okay, sir. That's it from my side. Thank you and all the best.
Thank you. Yeah.
Thank you. This was the last question for the day. I would now like to hand the conference over to the SGA team for closing comments.
Thank you. Thank you everyone for joining us in this earnings call. We appreciate your time and showing interest in the company. Also, I would like to thank the management team for their precious time. In case of any queries, you can get in touch with us or the Privi team. We look forward to meeting all of you over the next call. Thank you.
Thank you.
Thank you, everybody.
Thank you. On behalf of Privi Speciality Chemicals, that concludes this conference. Thank you for joining us, and you may now disconnect the lines.